Today, we're diving deep into an eye-opening topic: how governments and banks keep you poor. You've probably wondered why it feels like the odds are stacked against you in the financial game. Well, hold on tight because we're about to unravel the hidden mechanisms that perpetuate this cycle of financial struggle. Throughout this gripping journey, we'll shine a light on the strategies employed by governments and banks to maintain control over your hard-earned money and limit your financial growth. We will uncover the truths, share insights, and equip you with the tools to reclaim your financial freedom. Graduating from college and landing your first job is a moment of triumph, a step towards independence and financial freedom. The excitement of receiving your first paycheck is unparalleled, filled with dreams of what you can achieve with your hard-earned income. However, this euphoria quickly dissipates when the harsh reality sets in: the student loan debt that looms over you like a dark cloud. Unfortunately, this experience is all too familiar for around 1 in 5 American adults burdened with student loan debt. But it's not your fault. It's just one way that governments and banks might be keeping you in a perpetual cycle of financial struggle. Debt and its impact. Debt, when managed responsibly, can offer opportunities and convenience. It allows startups to launch, enables people to make significant purchases, and supports investments. However, too much debt and unfavorable interest rates can cause severe problems, leading to anxiety, depression, and mental health issues. Studies have shown that being in debt can take a significant toll on an individual's overall well-being and happiness. Moreover, the burden of debt can extend beyond financial constraints, affecting relationships and physical health. People in debt are 3 times more likely to have suicidal thoughts, and those who die from suicide are 8 times more likely to be in debt. Debt-induced stress and financial pressures often lead to conflicts in relationships, potentially culminating in divorce. The institution of debt and its predatory practices. While personal responsibility is crucial in managing finances, it is equally vital to recognize the role of larger institutions in shaping the debt crisis. Banks, profit-driven entities, often employ predatory practices, encouraging individuals to incur more debt than they can handle. They prioritize clients who remain in perpetual debt, referred to as revolvers, rather than promoting responsible debt management. Credit card companies, for example, lure customers with 0% interest offers, eventually leading them to accumulate considerable debt when higher interest rates kick in. Such strategies are designed to nudge individuals towards financial traps, keeping them locked in debt and increasing profits for banks and credit card companies. Institutionalized debt, education, and housing. 2 significant expenses that leads individuals into debt are education and housing. Over the past 50 years, the cost of both has skyrocketed, outpacing inflation. The reduction of state funding for colleges and universities is a key factor behind the rising cost of education. This has forced educational institutions to operate more like businesses, focused on competing aggressively and making profits instead of prioritizing student welfare. Similarly, the housing market faces its own set of challenges. Government regulations, particularly housing density regulations, prevent higher density housing construction, artificially limiting housing supply. This scarcity drives up housing prices, making home ownership unattainable for many and forcing others into significant debt to secure a place to live. While personal financial responsibility is important, governments have a responsibility to protect their citizens from exploitative debt practices. Policymakers must address the systemic issues that contribute to the debt crisis, such as rising education and housing costs. By investing in education and subsidizing housing, governments can create a more equitable financial environment for their citizens. Corporate accountability is also crucial in curbing predatory debt practices. Regulations should be put in place to limit deceptive lending and credit card tactics that trap individuals in unmanageable debt. Furthermore, the creation of financial literacy programs in schools and communities can empower individuals to make informed financial decisions and avoid falling into debt traps. Conclusion: debt can be both a tool for progress and a path to financial ruin. While personal responsibility is essential in managing debt, we must recognize the broader systemic issues that contribute to the debt crisis. Governments and financial institutions must work together to create an environment that supports responsible borrowing while protecting individuals from exploitative practices. As individuals, we should strive to make informed financial decisions, read the fine print, and seek help when necessary. By educating ourselves about personal finance, we can build a solid foundation for our future and avoid the pitfalls of excessive debt. Ultimately, through collective efforts and informed decision-making, we can navigate the complexities of debt and move towards a world where financial freedom is attainable for all. By addressing institutionalized debt and promoting responsible financial practices, we can create a brighter and more equitable future for generations to come. Acknowledging the issue of debt is vital for society's well-being and individual prosperity. Acknowledging the impact of debt on mental health, relationships, and overall happiness should compel us to push for significant changes in debt management and lending practices. Governments must take a proactive role in supporting education and affordable housing options to alleviate the burden of student loans and mortgages. By investing in accessible education and housing, they can ensure that future generations are not trapped in a cycle of debt from the very beginning of their adult lives. Financial institutions must also take responsibility for their role in promoting predatory debt practices. Implementing strict regulations to prevent exploitative lending and deceptive credit card strategies can protect consumers from falling into insurmountable debt traps. Individuals must educate themselves about personal finance and seek professional advice when needed. Developing a strong financial literacy foundation will empower people to make informed choices, avoid unnecessary debt, and manage their finances responsibly. Breaking free from the perpetual cycle of financial struggle caused by debt requires collective action. Citizens, organizations, and policymakers should collaborate to create a more equitable and sustainable financial system that promotes responsible borrowing and prioritizes the well-being of individuals. As we work towards a debt-free society, let us remember that financial freedom is not merely about accumulating wealth, but also about achieving a sense of security, happiness, and peace of mind. Together, we can create a future where individuals can pursue their dreams and aspirations without the constant weight of debt dragging them down. Remember, financial education is a transformative force that can redefine your life. It's an investment in yourself and your future, transcending boundaries and limitations and unlocking doors to opportunities you never knew existed. As you embark on this exciting venture with us, you'll find that each episode serves as a stepping stone towards financial literacy and empowerment. In the pursuit of financial growth and prosperity, there's no better time than now to take charge of your financial journey. By subscribing to our channel and clicking the notification bell, you open the door to a wealth of valuable content and knowledge that has the potential to transform your financial perspective forever.